Hello. Hi. Very good evening. How are you? Yes, we are going to finish it today. We are in the last section and the last chapter. Okay. Estate tax return. So hearty welcome and hearty congratulations to all the people who are making through the examination. Okay. It's very sad. Some are losing it with just 1 mark, but my friend, nobody cares, how many attempts you gave about the EA examination and all. All that matters is, are you an enrolled agent or not? So that's what matters at the end, okay? And even the companies, when they are hiring, they look at your knowledge. Yeah, some may prefer, enrolled agents. Yeah, many may prefer enrolled agents, but when you're working with a proper company, they will go with the knowledge. Okay, so if you are studying something again, maybe God wants you to get, a deeper expertise in that particular topic. Okay, so do not get disheartened if you're losing it with 1 mark, 2 marks, or something. Anything, if you're losing it above 100, between 100 to 105, I mean, 105 is pass. Between 100 to 104, anything above 100, if you fail, it means you have done really well. You really tried your best, to get to the finish line. But if you have got anything below 100 and below, it means your preparation has been very worst. Okay, chalo. So do well. I mean, overcome fear. We are with you. Your parents are with you. Your teachers are with you. Okay. So I just wish you good luck. Stay focused. Sacrifice a little, until you achieve. Any successful person has sacrificed something or the other at some point in time. Okay. Nobody can say that I have enjoyed all the areas of my life. If you did, then God's grace. Yeah. This sacrifice of your weekends or your enjoyment and all these things is also temporary. I mean, once you pass, get into a good job or establish your own tax practice, I mean, do well. That's all. Okay. Chalo. With that note, let's get started. Let me know you are here. Yeah. Okay, so we will begin with estate tax return. Yeah, hi Karthik. Yeah, so we will begin with estate tax return. Yeah, keep coming. Please like the video. Please share it. Let's get started. Let's finish the weekend, with part 1, and then in our next session we will begin with part 2. Let's get started. So, yeah. Fine. Let's get started. Question number 1. Which of the following is a true statement regarding the deceased spousal unused exclusion? A surviving spouse may use the deceased spouse unused exclusion. The election must be made on Form 709. This election applies only to deaths before 2010. All of these choices. Which one do you think is the true statement? Go ahead. Good. Welcome. Right. Surviving spouse may use the DSU. Yeah. Option A. Good. Just a second. Yeah, keep answering others. Yeah. So surviving spouse may use the DSU. Option A. Good. Election must be made on 706, not 709, right? Election applies to deaths after 2010, not before. I mean, December 31st, 2010. Very good. I mean, type in, chota chota explanations like this. Yeah. Anjali Mishra, very good. Praveen, very good. Gautami, very good. Yeah, fine. Stay focused. Let's complete it today. Okay. I don't know how long it's going to take, but let's complete it. 37 MCQs are there for you and me. So for dissidents dying in 2020, what is the applicable exclusion? Easy. Come on, just type in the alphabet. Issue, login again. Yeah, option C, 11.58 million. Yes, option C. Perfect. Perfect. So let's take up the next question. What are the filing requirements? What are the filing requirements for a dissident who died in 2020? The final income tax return form 1040 for the dissident. The final income tax return form 1040 for the dissident. Then estate tax return form 706 if the FMV of the assets exceed 11.58 million. Fiduciary income tax form 1041 for the estate during administration. Then D, all of these choices. Tell me, what are the filing requirements? Yes. Right, Karthik. So in case of a decedent, you will file a form 1040, right? That's your final income tax return, and then the estate tax return, that is form 706, if the FMV of the assets exceed 11.58 million. The fiduciary income tax return for the estate during the time of his administration. So A, B, C, all three are correct. So D is the right answer. Good, Karthik. Fine. Jagan is single and died on June 1st, 2020. His gross estate was 12 million and he gave no gifts prior to his death. He should have given. Up to the date of death, he received a pension of $25,000. After his death, he had $800 gross income interest from his estate. Which of the following must be filed by his executor? Final return, estate return, and then fiduciary income tax return. Good. I think you know the answer now. That's all. If you understood the earlier question, then this question will also be easy. Same. Yes. Good, Anjali and Agastya. Yeah. Yeah. Yes. Okay, let's take up the fifth question. Unless an extension is received, Form 706 estate tax return must be filed. Okay. Unless an extension is received, Form 706 estate tax return must be filed within 9 months of the date of death, no later than the due date of the estate income tax return, within 6 months of the date of death, or by the 15th day of the 4th month following the date of death. Which one do you think is the right answer? Go ahead. Yeah. Good. Good. Hi, brother Joshua Kishore. Yeah. Yes. Right. Good. Mr. Joshua, Agastya, Gautami, very good. Joel, very good. Anjali, very good. Very good. I mean, it has to be filed, within 9 months. Estate tax return. Next, 6. Chari died June 15, 2020. His gross estate was valued at 3 million. He had never given a taxable gift before. Form 706 US estate tax return must be filed by April 15th, December 31st, March 15th. Not required to be filed. What do you think is the answer? Good? Yeah. Option D. True. Option D, not required to file because gross estate is less than 11.58 million. Very good, Agastya. Yeah. Good, Gautam. Yeah. Not required as the estate value is not exceeding 11.58 million. Yeah. Good, Joshua. Yeah. D. Yeah. Not required. Right. Very good. Yeah. Is not required to file as his gross estate is less than 11.58 million. Very good. Next. Seventh one. Mr. Anand died April 30, 2020. His gross estate was $14 million. Form 706 must be filed by. Okay, opposite of question 7. Question 6. Go ahead. April 15, Jan 30, December 31st, not required. Yes. It must be filed within 9 months from April 30, that is Jan 30, 2021. Option B. Very good. Anjali, very good. Gautami, very, very good. Yeah, by Jan 30, within 9 months from the date of death. If needed, extension of another 6 months from Jan 30 can be taken. Very good. Yes. Jan 30 within 9 months after death. Yeah, answer B. Very good. Awesome. 8. An estate tax return form 706 must be filed within so and so date after the date of the decedent's death unless an extension of time to file is required. Simple. Go ahead. 9, 16, 6, 12. Now the answer. Yes, within 9 months. 9 months, yes. Good, Joel. Good, PUBG. Good, Karthik. Yeah. Which of the following is not a provision for paying the estate tax on Form 706? Not a provision. A Form 4768 must be filed to obtain an automatic extension to file Form 706. The IRS may give consideration for a payment extension if an estate includes a claim to substantial assets that cannot be collected without a lawsuit and the gross estate cannot be determined when the tax is due. C. The IRS may extend the time for payment of the estate tax for up to 10 years if a reasonable cause can be shown. D. Taxpayers are allowed an automatic 6 months extension only if they provide an explanation for the request. Go ahead. Which one is not a provision? Yeah. No explanation is required for extension. They can file Form 4768. That's it. Yeah. TP is not required to provide any explanation while asking for an automatic extension. Yes. Right. So A is right. Form 4768 must be filed to obtain automatic extension. Then B also may give consideration for payment extension if an estate includes a claim to substantial assets that cannot be collected without a lawsuit. C also, IRS may extend time up to 10 years if a reasonable cause can be shown. So D is the incorrect answer. I mean, D is the right answer, incorrect statement. 10. An estate tax return must be filed by April 15th of the year following the year of the decedent's death, unless an extension of time to file is requested. Within 9 months after the date of the decedent's death, unless an extension of time to file is requested. Within 1 year after the date of the decedent's death, including extension. By October 15th of the year following the year of the decedent's death, if an extension was granted. What do you think is the right answer? Let me know. Good, Gautam. Yeah, option B, 9 months. Yeah, we have been seeing this, right? Good. Option B, 9 months after the date of decease. Yeah. Within 9 months from the date of death until extension is taken. Very nice, very good. Keep the pace. Which of the following is not included in the gross estate? Annuities, US government bonds exempt from federal taxes, wrongful death claim brought by the decedent's heirs, property over which the decedent possessed a general power of appointment. Let me know. Not included. Wrongful death claim by heirs is not included. Option C. Very good. All items in which TP had an interest at the time of death will be included in gross estate, but not wrongful death claim by heirs. Chandar is preparing the estate tax return form 706 for his deceased brother Jeevan. Jeevan died December 15th, 2020. Which of the following will not be included in Jeevan's gross estate? A. Land that Jeevan had signed a contract to sell but had not completed the sale. B. Real estate that will be passed to Jeevan while his parents die. C. Property jointly owned by Jeevan and his spouse. D. Stocks and bonds owned by Jeevan at his death. Okay. So even when you are solving these questions, okay, you may feel good, okay, but there are certain revelations, that may come to you while you're solving this, okay. So just try to scribble it, okay. Zara likh dena kahin pe notes mein, please write down, that this is what it is for, this is what it is for. Yeah, I mean, some important points, if you get it, please try to add it in your notes, not in the MCQ handbook. I mean, on the day of examination, just flip through your notes, that's all. Again, don't solve any MCQ. All the MCQs must be solved only in the examination. Getting it? Go ahead. I mean, somebody else's death, right? Real estate will be passed to Jeevan when his parents die. So, can you tell when the parents will die? Right. Real estate that will be passed to Jeevan as inheritance is something which did not happen yet. So, Jeevan had no interest in that event. So, option B is the answer. And signed contract, but he died before the sale. Okay, jointly owned property. Yes. Okay, so A is right, he's saying. B, C is also right, he's saying. Stocks and bonds, he said. Very good. Then Gautami, as Jeevan doesn't own any interest, neither has any share or power over the property at the time of death. Okay, so B is the right answer. Gross estate includes any values of property in which decedent had an interest in the form of share or ownership or partnership or control power at the time of death. Very good. Akhil, good. B. Yeah, very nice. Good. I'm able to feel that, as if we are talking, in a classroom. अच्छा लग रहा है मुझे. Harish, a single person, a little bit of maths is involved here. Harish, a single person died in 2020. The executor does not elect the alternate valuation date. Given the following information, determine the value of Harish's gross estate. Form 706. FMV at the time of death. Okay, certificate of deposit 100,000. Mortgage receivable on sale of property 2 million. Paints and collectibles $500,000. Income tax refund due from 2018 individual tax return $30,000. Household goods and personal effects 20,000. So A, B, C, D. Which one do you think is the right answer? Tell me. Value of Harish's gross estate. Yeah. Maybe this reference will help you. FMV of all items. 100k plus 2 million plus 500k plus 30 plus 20. So 2.65 million. So B is the answer. Very good. FMV of all items, yes. एक जीरो भूल गए आप. Akhil. Yeah. 2.65 million. Very good. Option B. Next one. Jagan, a single taxpayer, died on March 3rd. Based on the following information, determine the value of Jagan's gross estate. Form 706. Same. FME on the date of death. Life insurance on Jagan's life payable to Jagan's estate. $250,000. Jagan's revocable grantor trust. $700,000. Stock given to Jagan's son in prior year. No gift tax was paid. $50,000. Go ahead. Tell me what's the value of Jagan's gross estate. That's quick. Good. Except stock gifted to son in the prior year. Everything else gets included in gross estate. Life insurance, revocable grantor trust, both. 950,000, right? Yes. Chalo. So A is the right answer. Next, given the following information, determine the value of Shravan's gross estate. Shravan is single. Cash 4,015,000. Life insurance 200,000. Jointly owned property 100,000. Gross estate value. The question is on gross estate value. Good. Yeah, this for the last question. Yeah. Very good, Gautam. Very good, Akhil. Nice. Fine. Give me the answer for this one. Yeah. Yep, everything. Cash, life insurance, joint ownership. Yes, everything. Good. Good, Gautami. Good, Akhil. Very nice. Next. Yeah. Yeah. 16th one. When Lasya's husband died in 2006, he set up a qualified terminable interest property QTIP trust, naming Lasya as the beneficiary for her life. Lasya died during the year. Given the following information, determine the value of Lasya's gross estate. Form 706. FMV on date of death. Okay, Lasya's recoverable grant trust 750, QTIP trust 1 million. Go ahead. What is the answer for this? Yes, same. I mean, these questions are pretty easy. Yeah, granted test and QTP test. Yeah. Gunshot, you can expect gunshot from this topic. So, next one, 17th. Given the following information, determine the value of Sarita's gross estate. I mean, almost all the questions are same. Go ahead. Beneficiary for life of QTIP, qualified terminal interest property trust. Then irrevocable trust. Sarita was the grantor but retained no interest in the trust. Revocable grantor type trust. 500,000. Go ahead. Tell me what's the answer. In that irrevocable trust, she had no interest. Yeah, so that is not part of the gross. Yeah, so only 2 million plus 500k. So 2.5 million. Yeah, C is the right answer. Yes, yes, 2.5 million. Very good. Okay, good. 2.5 million. Since Sarita didn't retain her interest in the trust, it's not included in the gross estate. Very good. Very good. Which of the following transfers is not included in decedent's gross estate? Which of the following is not included in the decedent's gross estate? Irrevocable transfers, transfers taking effect at death, transfer of life insurance made within 2 years of death, then transfers with retained life insurance. Which one is not included? Go ahead. Yeah, that's the previous question. Revocable transfers are part of gross estate even if it happens before taxpayer's death. Not irrevocable transfers. Option A. Very good. Akhil, good. Anjali, good. Gautami, very good. Yeah. For 2020, the estate tax applicable exclusion amount is, and the maximum estate and gift tax rate is. Wow. I mean, answer is jhalakta na. I mean, your eyes go straight. Yeah. Some questions are like that. Come on, ping me the alphabet. Yeah, see, 11.58 million and 40%, right? Yeah, 11.58 million and 40%. Right. Perfect. I mean, your eyes goes straight to that, no? Mast rehta hai. It's like, finding your girl or your man, in that big crowd. So, 20. Start loving the subject. Trust me, start loving the subject. The subject will love you, love you back, and when subject loves you back, you will always prosper. if a decedent's estate, Form 706, includes property that was received from a person who died within so and so years before or so and so years after the decedent received the gift, the decedent's estate may be allowed a credit for estate taxes previously paid on the property. Tell me, which one? Yeah. Credit for prior transfer Schedule Q if died within 10 years. So option A, right? Yeah, 10 years and 2 years, right? Very good. 10 years before and 2 years after receiving the gift. Very good. Okay, very good. Very nice. 21. Shyam died on February 10th, 2020. His only asset was a building with a basis of 1.5 million and FMV of 4 million on the date of his death. Shyam's daughter inherited the building. What is her basis in the property? 1.5 million, 2.5 million, 2.8 million or 4 million? Good. Perfect. FMV at the date of death or alternate valuation date, option D. Very nice. Very nice. 4 million, right? FMV on the date of death is the basis in the property for her daughter, right? Very good. FMV at the time of death, option D, yes, 4 million. D is the answer, right? In the earlier. Next, 22. Mr. Ayush died on June 15th of the current year. The assets in his estate were valued on his date of death and alternate valuation date respectively as follows. I think this kind of a question we did it in the class also. Yeah. Home 4.65 million on June 15th, then December 15th 4.7 million. That's alternate valuation date. Then stock 825,000, 850,000, 600,000, 525,000. I mean, values on the date of death and on the alternate valuation date. The executor sold the home on August 1st for 4.675 million. If Mr. Ayush's executor property elects the alternative valuation date method, what is the value of Mr. Ayush's estate? 6.050 million, 6 million, 6.075 million, 6.15 million. What is the value of Ayush's estate? Go ahead. Very beautiful. Nice. Since alternative valuation method is elected, stock and bonds will be valued as on the AVD date. But coming to home, since it's sold within 6 months from the date of death, the value of home will be the value that is on the date of sale. Very good. So 4.675 million. Yeah, Agastya has given. Yeah, 4.675 million plus stock on the AVD date 850, then bonds on the AVD date 525. Yeah, that's dollar 525. Then yeah, 6.05. Yeah, A. Yeah, sorry, D is the right answer. Yeah, 6.15 is it? What's the math? 6.050. No? Yeah, so A is the right answer. Yeah, AVD is 6 months from the date of death. Very good. Calculate the total. How much is the total? 4.675 plus 525 plus 850. 6.050. Why are you giving D as the answer? Calculate. Hmm. 6.05. Check. Right explanation but wrong answer. Generally, we have time to file 9 months after the date, so we have to select December 15th valuation. So, yeah. Yeah. Yes. 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 Yeah. No problem. Yeah. Okay. So, A is the right answer. Very good. Sure. Next one. Mayuri died on Jan 20 of the current year. The assets included in her estate were valued as follows. Okay. Jan 20, July 20, and then October 20. The value of house, value of stocks given. The executor sold the house on October 20 of the current year for 4.7 million. The AVD was properly elected. What is the value of Mayuri's estate? So, what is the value of Mayuri's estate? Bolo, tell me, what is the value of Mayuri's estate? Because AVD is elected, the value on the AVD matters, right? Yeah. So option C, 4.8 plus 6. Yeah. So 5.4. The value of house is not as on date of sale, as it's not sold within 6 months from the date of death, right? And since AVD is elected, all properties will be valued as on AVD. Very good. House sold within 6 months. So July 20th. Yeah, C is the right answer. Very good. Sure. 24th. With regard to electing the AVD method in determining the gross value of the estate assets for Form 706, which of the following statements is false? False. The executor or personal administrator of an estate always has the option to use alternate valuation in determining the gross value of estate assets. The election is effective only if a return is required to be filed. The election of the alternate valuation method must be used on the first estate tax return filed for the estate. The election applies to all of the property in the estate. Which one is false? Go ahead. Yeah, executor doesn't always has the keys to use AVD. Yeah, it's only for the first one. Yeah, only if it decreases the value of gross estate, yeah, AVD can be used. So option A. Executor cannot always elect AVD. Yeah, not always. Next one, 25th. With regard to the alternate valuation method in determining the gross value of estate assets on Form 706, which of the following statements is false? The election must be made on the first estate tax return filed for the estate. The election may be made only if it will decrease the value of the gross estate and the sum of the estate tax and the generation skipping transfer tax. The return does not have to be filed on time for the election to apply. The election may be revoked only with IRS approval. Which of these statements is false? Go ahead. Yes, IRS cannot revoke this election, because if the election is made on the first estate tax return, and if it is decreasing the value of the gross estate and the sum of estate tax and the GST tax, and return need not be filed on time for election to apply, then there's no reason IRS can revoke it. Yeah, IRS does not revoke. Only in this case, return need not have to be filed on time, right? Return can be filed within 1 year of the due date, including extensions, right? Perfect. Perfect. Yeah. So D is the right answer there. Earlier one. Yeah. 26th. What property included in the decedent's estate qualifies for the special use valuation? Property used in a closely held business. Neither qualified real property that is devoted to farming nor property used in a closely held business. Both qualified real property that is devoted to farming and property used in a closely held business. Then qualified real property that is devoted to farming. Go ahead. What property included in residence estate qualifies for special use valuation? Which one do you think is special use valuation? Go ahead. Yeah, mention the alphabet. Good. Mention the alphabet, hyphen, you give the explanation. Yeah. Special use valuation applies to both qualified real property that is devoted to farming and also property that is valued in closely held business. Very good. Yes. Good, Akhil. Yeah. So C is the right answer here. Which of the following would not reduce the gross estate? Personal exemption, charitable deductions, funeral expenses paid off of the estate, or debts owed at the time of death. Which one? Yes, B, C, D, everything will reduce the gross estate, charitable deductions, funeral expenses, debts owed, all these reduce B, C, D, but not A, personal exemption. But personal exemption will not reduce. Good. Yeah, A only because remaining 3 are deductible. Yeah. Right. Gross estate is reduced by all other expenses like debts owed, funeral expenses, donation to charity, losses, property tax. Very good. Very nice. Sridevi died on. Okay, fine. There, A is the right answer. Okay, personal exemption. Now, 28. Sridevi died on December 31st, 2020. Her gross estate equals 600,000. I mean 6 million. Given the following information, determine Sridevi's taxable estate. Charitable contribution specified in Sridevi's will, $100,000. Funeral expenses paid by estate, $10,000. Medical expenses claimed on Sridevi's Form 1040, $20,000. Do the maths. What is Sridevi's taxable estate? Question is on taxable estate. Go ahead. Perfect. Perfect. Mention the alphabet, Agastya. Mention the alphabet. Good explanation. Charitable contributions and funeral expenses are only deducted from gross estate. Medical expense have already been claimed on final tax return on Schedule A, Form 1040. Very good. So A is the right answer. 6 million minus 100,000 minus 10,000. Okay. Okay. 29th. Following the death of her husband, the executive of his estate paid the following: medical expenses of the decedent paid within 6 months of the date of death and not claimed on the decedent's final income tax return. Okay, those are numbers actually. 1, 2, 3, 4. Please see them as numbers. Medical expense of the decedent paid within 6 months of the date of death and not claimed on the decedent's income tax return. Funeral expenses of her husband. 3. State inheritance taxes. 4. Qualified charitable contributions as a bequest dictated by the will of her husband. Which of the above generally would be allowable deductions in determining the taxable estate on the federal estate income tax return form 706? Go ahead. 1, 2, 3, 4. Medical expenses, funeral expenses, state inheritance taxes, and then qualified charitable contributions. Thank you. All are allowable deductions. So option C. Very good. Yeah, C. All expenses are allowable deductions. Yes, Praveen. All are allowable deductions. Very nice. Medical expenses, funeral expenses, state inheritance taxes, qualified charitable contributions, qualified as a bequest dictated by the will of her husband. All qualify. Next one, 30th. Very good. Very nice. All of the following items can be claimed as deductions against a decedent's estate except what? Executor's fees, charitable bequests, legal fees to settle estate, special bequest to son. Go ahead. Special bequest to spouse is allowed as deduction against the estate, not to son, daughter, or anyone. Yeah, option D. Very good. Right. Executor fees, charitable bequests, legal fees, all are valid deductions. Very good. So D is the answer. Okay. 31. Which of the following items is not an allowable deduction on a decedent's estate tax return? Repeat. Executor fees, bequest to surviving ex-spouse, okay. Property taxes accrued before death but not paid until after death. None of the items is allowed as deduction against the decedent's estate. What do you think is the answer? Go ahead. Yeah. Bequest to a surviving ex-spouse. Right, चल भी. Right, right. Restorer claimable, yeah. जीवन के साथ भी ही नहीं है, जीवन के बाद में. Right. So B is the answer. Okay, in general, which of the following items are allowable deductions against a decedent's estate? Form 706. Funeral expenses, mortgage, charitable bequest, all of these choices. Go ahead. All mentioned expenses are allowable. Right? All of these. Right? Very nice. Which of the following statements is true regarding allowable deductions on Form 706 US Estate Tax Return? Penalties incurred as a result of the federal estate tax deficiency are deductible administrative expenses. Then attorney fees paid incidental to litigation incurred by the beneficiaries are a deductible administrative expense. Then funeral expenses are not an allowable expense. Next, executor's commission may be deducted if they have actually been paid or it is expected that they will be paid. Go ahead. Which one is true? All executor fees, commissions, other administrative expenses of estate are allowable deductions. Correct. Option D, yes. Penalties, no. Penalties cannot be deducted. Penalties, that's not, it cannot be deducted. Attorney fees with litigation. Funeral expenses is allowable. Yeah. Executive commission, yes, allowable. So option D, very good. D is the right option. Very nice. Mitra's gross estate equals 8 million. Given the following information, determine Mitra's taxable estate for 2020. Charitable contribution specified in Mitra's will 200,000. Funeral expenses 10,000. Medical expenses claimed on Mitra's form 1040 20,000. So, what is Mitra's taxable estate? Yeah, repeat question, no? Do it. Yeah. Repeat question. Gross estate value minus charitable contribution minus funeral expenses is equal to option D. Yeah. Yeah. 7.7 allowed as deductions from the estate. Medical expenses are already claimed on 1040. Very good. Yeah, D. Very good. Nice. Okay, next one, 35. Based on the following information, what is the total allowable deduction against the decedent's estate? Mortgage and notes receivable 10,000, income in respect of a decedent 5,000, funeral expenses 12,000, attorney fees 20,000. Go ahead, calculate. Yeah. Okay. Is it clear? Okay. Did I miss the explanation in the earlier one? Okay, fine. So mortgages and IRD are income to estate. Funeral expenses and attorney fees are deductible. Right? Very good. Yes, $32,000. Only two are incomes. Right? Good. Then yeah, 10K and 5K are incomes, so not deductible. Those are taxable. Taxable, and funeral expenses and attorney fees are deductible. So 32K. Yeah, yeah. Right. Option B. Yes. Nice. Yeah. Yeah. Thank you for letting me know. Yeah. 36. For 2020, which of the following is not an eligible credit on a state tax return? Form 706. Go ahead. State death tax credit for tax on prior transfers, credit for foreign death taxes, and then unified credit. बोलो कौन सा है right answer? Okay, so B, C, D are eligible credits on Form 706. So state death tax credit is wrong, right? It's allowed as deduction. Other three are allowed as credit. Very good, very nice. Hey, we are in our last question. Very nice. Generally, no tax may be assessed later than how many years after the estate tax return is filed or is due, whichever is later. Go ahead. Option B, 3 years, 3 years, 3 years. Awesome. Awesome, awesome, awesome. Give yourself an applause for completing this part 1 successfully. Perseverance is the hard work you do after you get tired of doing the hard work you already did. Just keep persevering. That's all. And people, so before we close once again, okay, I just want to say that I love you a lot, and I love to see you growing. I love to see you being a blessing for your family, to your team, to your company that you're working for. Okay, so wherever you are, I just hope and pray that you will always prosper. May God be with you. May God give you that knowledge, wisdom, understanding to better serve the community. Okay, EA is just an entry and an access. Yeah, that's also EA. It's just an entry and an access to get into your dream job, or to get that license to establish your US tax practice. Okay, but first person that you have to lead is you. iLead. You have to lead yourself. Okay, so when you're getting into the examination, also do not fear. Yeah, it is very common that you may feel that little fear and things like that, but I would very strongly say, do not fear. Do not fear. God is with you, and you have put so much effort in preparing for the examination and all. So please do not lose heart, and once you pass also, please do let me know that you have passed. We will be very happy to celebrate your success. Yeah, and I just love you. That's all. Do very well. May God bless you. Revise it once again. I really felt very good, solving the MCQs with you and all. I mean, we completed 45 sessions on MCQ. I'm really feeling so very good. I look forward to seeing you in the next parts also. The tax season is also approaching, so, and also given that I have my FPC classes, my schedule may be a little busy, but I love to spend time with you. Okay, so I just wish you good luck, and I once again request you not to lose heart, and whatever you have started, make sure that you finish it. Okay, do not get disheartened. So God forbid, in case you lose the examination with 1 mark or something like that also, that's okay. You see, most of the chartered accountants who are in practice, they are not someone who passed in the very first attempt, who are successful in the practice. Yeah, there are rank holders, but the one who is in the practice, डुबकी मार के पास हुए वो लोग टपक के पास हुए वो लोग. So in case you fail also, please don't worry about that. No one is going to ask you which attempt you passed. Okay, so may God be with you. I wish you all a very, very happy new year in advance. Yeah, Merry Christmas also. It's the Christmas season, and I pray that God will give you the gift of being an enrolled agent in this 2021 or 2022. Okay, God bless you, love you, and I can't wait to see you as an enrolled agent. God bless you. Take care.